Hello and welcome back to Boni's Life. In our last episode, we dissected the shocking 99% profit collapse at Porsche, a crisis that shook the foundations of the luxury car world. But as we peeled back the layers, it became clear that Porsche's problems were not happening in a vacuum. They were a symptom of a much larger disease, a rot that has spread to the very heart of its parent company, the colossal Volkswagen Group. Today, we're zooming out to look at the entire empire. Because what's happening at Volkswagen isn't just a crisis, it's a full-blown multi-front war for survival. This is the story of how one of the world's largest industrial giants, a sprawling empire of brands from Skoda to Lamborghini, is facing a meltdown of epic proportions. The numbers paint a grim, almost unbelievable picture. In the first 9 months of 2025, the Volkswagen Group's operating profit plummeted by a staggering 58%, falling from 12.8 billion euros to just 5.4 billion euros. Think about that for a moment. More than half of the group's profitability evaporated in a single year. The group's operating margin, a key indicator of how efficiently a company turns revenue into profit, was more than halved, collapsing from 5.9% to a razor-thin 2.3%. To put this in perspective, many analysts consider anything below 5% to be a warning sign for an automaker. The third quarter was even more brutal, with the company posting an operating loss of 1.3 billion euros. This isn't just a German industrial giant stumbling. This is a behemoth on its knees, gasping for air in an increasingly hostile environment. And at the center of this financial black hole is the problem child we've already discussed in detail, Porsche. The strategic blunders at Porsche have sent a devastating ripple effect through the entire Volkswagen Group. Remember, VW owns a commanding 75.4% of Porsche. When Porsche sneezes, the entire group catches a cold. And in 2025, Porsche didn't just sneeze, it had a full-blown case of financial pneumonia. The disastrous U-turn on its EV strategy, the cancellation of its battery production facility, and the humiliating retreat in the Chinese market forced Porsche to book a staggering 4.7 billion euros in charges in the third quarter alone. This single-handedly dragged the entire Volkswagen Group into the red for that quarter. The Porsche brand, once the crown jewel of the empire, the cash cow that funded innovation across the group, has become its anchor, pulling the entire ship down with it. This is not just a financial hit, it's a strategic catastrophe that has exposed the vulnerabilities of the entire conglomerate structure. And just like with Porsche, the crisis in China has been a catastrophe for the entire Volkswagen Group. For decades, China was VW's promised land, its single biggest market, accounting for roughly 1/3 of its global sales and a massive portion of its profits. Volkswagen was the undisputed king in China, the foreign brand that Chinese consumers trusted and aspired to own. But the game has changed, and it has changed with breathtaking speed. In the first 9 months of 2025, VW Group's sales in China fell by 2%. While that might not sound dramatic on the surface, it's a continuation of a terrifying trend. The market share of all foreign car brands in China has collapsed from 62% in 2020 to just 35% today. That's a loss of nearly half of the market in just 5 years. Volkswagen, once the undisputed king in China, is being dethroned by a new wave of nimble, tech-savvy domestic competitors like BYD, NIO, Zeekr, and even Xiaomi, the smartphone maker that has pivoted into electric vehicles with stunning success. VW's EV sales in China dropped by a disastrous 34% in the first half of the year. The Chinese consumer has moved on, embracing locally made electric vehicles that are not only cheaper, but often more technologically advanced, with better software, more features, and faster charging. Volkswagen, with its slow, uninspired, and overpriced electric offerings, has been left in the dust. The company that once defined the Chinese auto market is now scrambling to stay relevant. The Volkswagen empire is a complex web of brands, organized into different groups: core, progressive, and sport luxury. And the pain is not being felt equally across this empire. The core group, which includes the main VW brand, Skoda, SEAT, CUPRA, and VW commercial vehicles, has actually shown some resilience in the face of this storm. Its operating margin held stable at 4.4%, thanks in large part to the surprisingly strong performance of Skoda, which is proving to be a robust cash cow with an impressive 8% operating margin. Skoda, the Czech brand that many consumers see as offering Volkswagen quality at a lower price, is quietly holding the line, while its more prestigious siblings struggle. However, the Progressive Group, which houses Audi, Lamborghini, Bentley, and Ducati, is in serious trouble. Its operating result fell by 26%, and its margin shrank significantly to 3.2%. Audi, the technological heart of the group and a brand that has always prided itself on innovation and premium quality, is facing intense competition, particularly from Chinese electric vehicle makers in its key markets. Audi has been forced to cut its financial targets, a humiliating admission that its previous projections were wildly optimistic. The story here is one of internal division and inconsistency. While some parts of the empire are holding the line, others are crumbling under the pressure. This lack of cohesion, this inability to present a unified front, is a major strategic weakness. But the real disaster zone is the sport luxury group, which is essentially Porsche and the ultra-exclusive Bugatti brand. As we discussed in the previous episode, Porsche posted an operating loss in the first 9 months of 2025. Its deliveries fell by 11%, and the brand is in the midst of a full-blown identity crisis. The sport luxury group, which was supposed to be the profit engine of the entire Volkswagen empire, has become a massive liability. This is a stunning reversal of fortune, and it has sent shockwaves through the entire organization. Faced with this multi-front crisis, Volkswagen has been forced to take drastic and painful measures. The company has initiated a massive restructuring program, ominously titled Zukunft Volkswagen, or Future Volkswagen. The name itself is ironic because this future comes at a heavy, almost unbearable cost. The group is planning to slash nearly 48,000 jobs across its brands. Let me repeat that, 48,000 jobs. These are not just numbers on a spreadsheet. These are real people, real families, real communities that will be devastated by these cuts. The VW brand in Germany alone is set to lose 35,000 jobs by 2030. Audi is cutting 7,500 positions. These are not temporary layoffs. These are permanent job losses that will fundamentally reshape the German automotive industry. And in a move that is both symbolic and shocking, Volkswagen closed its factory in Dresden in December 2025. This was the first time in the company's 88-year history that it has permanently shut down a production plant in its home country of Germany. The Dresden factory, once a showcase of German engineering and a symbol of the company's commitment to its homeland, is now a ghost town. These are not the actions of a company that is merely trimming the fat or making minor adjustments. These are the desperate moves of a company fighting for its very survival. But the job cuts and factory closures are just one part of the story. Volkswagen is also facing a crushing financial burden from US tariffs. The Trump administration's aggressive trade policies have hit the German automaker hard, with tariffs and related costs expected to reach up to 5 billion euros in 2025 alone. Of this, 4 billion euros are direct tariff costs, with the rest linked to lost margins as the company tries to absorb some of the costs rather than passing them all on to consumers. This is a massive hit to profitability, and it's a cost that is not going away anytime soon. The company has tried to mitigate the impact by moving some production to the United States, but this is a slow and expensive process. The tariff burden is a constant drain on resources, making it even harder for Volkswagen to invest in the new technologies and products it desperately needs to compete in the rapidly evolving automotive landscape. And then there's the issue of the electric vehicle transition itself. Volkswagen has committed to a massive shift towards electric vehicles, investing 160 billion euros through 2030 in electrification and digitalization. But this transition is proving to be far more difficult and expensive than the company anticipated. The ramp-up of electric vehicle production is causing lower margins, as EVs are currently more expensive to produce than traditional combustion engine vehicles. The company is caught in a painful squeeze. It needs to invest heavily in EVs to stay competitive in the future, but this investment is dragging down profitability in the present. The company's software division, CARIAD, which was supposed to be the technological backbone of its EV strategy, has been a disaster plagued by delays, cost overruns, and technical problems. While CARIAD's operating loss improved to 1.5 billion euros in the first 9 months of 2025, down from 2.1 billion euros in the prior year, it's still a massive drain on resources. The company is essentially paying billions of euros to develop software that its competitors, particularly Chinese EV makers, seem to be able to produce faster, cheaper, and better. There's also a looming threat on the horizon that could make things even worse: a potential chip supply crisis. Volkswagen has warned that its full-year guidance is based on the assumption of an adequate supply of semiconductors, but a trade standoff over Dutch chipmaker Nexperia is threatening production stoppages across the automotive industry. Volkswagen's finance chief has said the company is working to secure production day by day and week by week, which is hardly a reassuring statement. If the chip supply dries up, Volkswagen could face even more production disruptions and financial losses. The crisis at Volkswagen is a perfect storm of internal failures and external pressures. The strategic blunders at Porsche, the collapse of the China market, the intense competition from new EV players, the crushing burden of US tariffs, the expensive and difficult transition to electric vehicles, the software development disaster, the looming chip supply crisis, and a bloated, inefficient corporate structure have all combined to create this existential threat. The company that once defined the automotive industry, the company that brought us the Beetle, the Golf, and the Passat, is now struggling to define its own future. The Volkswagen Group is not just facing a financial crisis. It's facing a crisis of identity, a crisis of strategy, and a crisis of leadership. The road ahead is fraught with peril. Volkswagen needs to restructure quickly and efficiently, cutting costs without destroying its ability to innovate. It needs to accelerate its electric vehicle development and catch up to its Chinese competitors in terms of technology and price. It needs to rebuild its position in the Chinese market, which will require not just better products, but also a fundamental rethinking of its strategy and partnerships. It needs to navigate the complex and unpredictable world of international trade, finding ways to mitigate the impact of tariffs and other protectionist measures. And it needs to do all of this while maintaining the morale and commitment of its workforce, which has been battered by years of bad news and uncertainty. Can this industrial giant restructure, innovate, and adapt quickly enough to survive? Or are we witnessing the slow, painful decline of an empire? The fate of hundreds of thousands of jobs, the future of the German auto industry, and the shape of the global automotive landscape all hang in the balance. And thank you for joining me on this deep dive into the Volkswagen crisis. This is a story that is far from over, and we will continue to follow it closely. What do you think is the biggest threat to Volkswagen's survival? Can the empire strike back? Or is this the beginning of the end? Share your thoughts in the comments below. And as always, don't forget to like, subscribe, and hit that notification bell so you never miss an episode. Until next time, stay informed, stay curious, and keep questioning the narratives. This is Boni, signing off.